Consider the Boeing 737 MAX and the Airbus A320neo. What do they have in common? They both run on the CFM LEAP jet engine. And inside these engines are a component so difficult to manufacture that global aviation relies on just two suppliers in the entire world to mass produce it. One is a subsidiary of the $300 billion giant GE Aerospace, and the other is the microcap stock, AeroEdge. What AeroEdge specifically produces are the titanium aluminide turbine blades for these next gen aircraft engines. This is a critical component for the LEAP engines, as titanium aluminide is half the weight of traditional nickel alloys, so it can reduce engine weight and thus boost fuel efficiency. The catch, though, is titanium aluminide is notoriously challenging to machine. It cracks, it destroys tooling, and is hard to produce and keep it within required quality specifications. AeroEdge built a fully integrated custom factory designing specialized cut-in tools from scratch and deploying advanced 3D hybrid manufacturing to succeed in making these turbine blades. With this, Safran has awarded AeroEdge the business to produce these machined turbine blades until at least 2034. The bull case thus rests on the growth of these LEAP engines, which it sure seems like it will continue to grow. Airbus and Boeing now have over 16,000 aircrafts on backlog, which they want to deliver much sooner than their current 12-year lead time, as airlines can save hundreds of millions of dollars in cost savings. GE and Safran have also committed over $1 billion to resolve the supply chain constraints, and we've seen LEAP volumes steadily grow from around 1,400 per year in 2024 to a committed 2,500 per year rate by 2028. AeroEdge has seen this growth reflect even faster in their balance sheet, growing at a 21% CAGR for revenue since 2023. They've also done this with a greater than 10% net margin rate that should continue to improve with operating leverage. Historically, Safran would provide the titanium aluminide material to AeroEdge just to machine and cut it, but starting in 2026, AeroEdge will be mass producing and supplying its own internally produced material, and it will be ramping this year, which will expand on their operating margins even faster. There's one huge risk, though, with AeroEdge, and that is customer concentration. Over 90% of their revenue is tied to Safran's LEAP engine, in which they are allocated 35% of the market share, compared to GE's 65%. If Boeing or Airbus face mandatory groundings that delay new deliveries, like it has happened over the past few years, it would immediately impact AeroEdge's financials. The growth in LEAP is an excellent opportunity as well, but there are several other plays that can benefit off this tailwind. Standard Aero on the MRO side and Carpenter on the material side. So is it really worth the extensive customer concentration with AeroEdge when there are other opportunities? Now, let's run a 2030 bull case scenario to see the upside potential of this microcap. For revenue, let's assume they're able to grow their LEAP allocation from 35% share to 50% share to their successful 2025 factory capacity expansion. Let's also assume LEAP stays at the 2,500 per year rate committed for the end of 2028, as there is a priority to catch up on these 16,000 planes that are in backlog. This would give them a $62 million revenue rate in 2030. For net margin, due to operating leverage and their transition to vertically in-house produce the material, let's assume net margins can grow from 14% today to 20% by 2030. For PE, let's give them a PE of 39, which is the historical PE for Carpenter, who's a lot more diversified, but shares the same technological moat as AeroEdge for the aerospace programs. Putting all this together gives AeroEdge a 2030 bull case of $483 million. Nice upside from today, assume that they only have this LEAP program. Now let's run this through mine and John's investing frameworks to see if we'd be interested in buying now. Before we do, please read the disclaimer in the notes below. We are not financial advisors, and anything we say should not be considered financial advice or a formal recommendation. Also, if you like content like this, please help us out and click a like and subscribe to follow us, as we analyze most innovative companies twice per week. Now let's run AeroEdge through my 5-point framework. From a leadership perspective, I give AeroEdge a very strong. They are led by Jun Muraneshi, who successfully transformed AeroEdge from a small Japanese business into a Tier 1 global aerospace supplier. He positioned aerospace as a manufacturing disruptor by relentlessly trial and error approaches until he found a way to succeed in titanium aluminide machining. This is an admirable trait that I believe supply chain leaders around the world would admire for their own business and perhaps give AeroEdge a shot to solve their biggest component manufacturability problems. For valuation, I give them a strong. In my 2030 bull case analysis, I show at least a 10% CAGR, assuming they have just the LEAP program. Nice returns in this single program scenario, but I do believe they will win new business. Their CEO alluded to their involvement in two separate jet engine initiatives, and he has also given a nice interview in which he says that to succeed, that he wants to broaden their scope beyond aerospace and into energy, e-mobility, and medical technologies. Having demonstrated success in this tough turbine blade manufacturing, I'm confident some other industry could give him a chance. I just can't model it in my bull case though, as right now it's just too early on that I have no idea which industry and what the margins would be if he does get involved in it. For revenue and profit growth, I give them a strong, around a 15% revenue CAGR that I expect through 2030. Most of this growth is in the next few years, with profit margins also growing from 11% to 14% in 2026 and to my expected 20 plus percent by 2030. Very solid for a microcap company. For total addressable market, I give them a week. They currently have 35% market share of the LEAP engine turbine blade market, which means it's around $100 million total market. This is just a very niche market, which is why AeroEdge needs to diversify into other industries. Lastly, for secular tailwinds, I give them a strong, a 16,000 aircraft backlog, along with a contract that runs through 2034, should give AeroEdge a steady cash flow business for the next decade. They just need to replicate this success across more programs and more industries. Overall, for AeroEdge, I do admire them. This is a microcap company that, along with GE Aerospace, are the only two companies qualified to provide the turbine blades critical for the LEAP engine's 15% fuel efficiency savings. I really like their CEO and believe he will get them more business. But right now, I am a no until I can see what other industries they partner with. What do you think, Dad, as you run AeroEdge through your technicals focused framework?
Thank you, Scott, for that excellent presentation and analysis of AeroEdge, symbol 7409.T. Okay, for the company fundamentals, it pays no dividend. The beta is 2.04. The market cap's around $300 million, and earnings come out around August 19th. So that's a neutral, and that's a little generous because the beta is a little high, but some people like high betas. So, but anyway, I called it a neutral. Okay, for the earnings history, I could only find two quarters, so 2 of 2 it beat. So I called that a neutral to positive. And for the company financials, the net profit margin is 14%. The debt to equity is a little high. It's 106%. And the PEG ratio for this industry is a little high. It's 1.5. I know it's a duopoly, but still, I think that's a little bit high for a PEG ratio. And so that's a neutral to negative. Then for my favorite part, the technicals, the 200-day moving average is just a little bit positive. The 50-day is above the 200, and the price is below the 50 but above the 200. And Bollinger Bands have wider volatility. And I couldn't find a slow stochastic oscillator, so I have to use the relative strength index. And that's 28%, which is oversold, considered oversold. The MACD is negative, quite negative, and unbalanced volume, I couldn't find it. The 1-year return is around 246%, and the 5-year return is around 84%. So I call that a neutral. I like that it's oversold, but being up 246% in this industry group is a little bit overextended in my opinion. That's why I called it a neutral. Okay, for the analysts that I follow, there's only one analyst, and it's a buy, and the price target is is for it to go up 81% in 1 year, which is really good. But let's see if the analyst is right. For institution holdings, it's 13%. So anyway, just a side note that there's a 2-for-1 split coming up in this stock June 29th, around June 29th. And the positive side, it's Scott had it at 6686 by 2030. That's his estimate, 2030 estimate. So that's 86% growth, which I'll take. I would take that. The negative side is the concentration risk, and it's a niche group. It is a duopoly, but still it's very niche. And I think it's overextended at this time. That's why it's been going down the last couple of days. And again, the PEG ratio is 1.5, so I think that's a little high for this industry group. So overall, this is a tough one for me to rate. It's probably going to be a no, but maybe we could keep an eye on it. And if it goes down to a lower, then maybe we can consider it. But right now, I'm a no, Scott. So back to you.
Thanks, Dad. Overall, we're both a no for AeroEdge. It's a great niche company, but the customer and program concentration makes the risk reward too unappealing at this time to add to our community portfolio. To view the current holdings in our community portfolio and to receive our free weekly newsletter, please check out the link to our Substack in the pinned comment below. This week, we'll be covering a small cap AI software platform for drones. And next week, we'll look at a continuation of the LEAP tailwind with Standard Aero. And to keep up on our twice per week videos on YouTube, please click like and subscribe to help us out. Until next time, happy investing.